and strategies. And one of the books I recommend you to read is The Snowball, Warren Buffett and the Business of Life. Another thing that I've done is over the years, I have always studied his annual shareholder letters to all the Berkshire Hathaway shareholders. If you want to study and understand Warren Buffett, in his own words, how he sees business, how he sees investments, I think that's the best resource. So today, I'm going to share with you Warren Buffett's 5 principles and rules for investing. Warren Buffett investing principle number 1, never lose money. Investing rule number 1, never lose money. Rule number 2, never forget rule number 1. You have to understand Warren Buffett doesn't just look at return on investments. He also looks at return of investment, meaning how safe is this investment going to be in 5 years, 10 years, and 20 years. And Warren only invests in what he understands. Even though there's so many opportunities come across his table, and some of those are tempting, but Warren doesn't look at those. He only invests in what he understands. You see, most people, they approach investing like they're going to Vegas, right? They're gamblers, they're not investors. They go into the stock market thinking about, well, you know what, how quick am I gonna make a quick buck, right? How quick am I gonna make my money? Versus having that long-term view. You hear this from gamblers a lot, right? They go to Vegas and say, you know what, I'm gonna bring $3,000 and I'm gonna stop once I lose all that 3K. A lot of people approach the stock market with the same attitude. I'm gonna lose X amount of dollars, then I'm gonna be done. Well, that's not how you approach investing. Warren Buffett's rule number 1, never lose money. Warren Buffett investing principle number 2, stick with long-term value investing. Now, this is not sexy, but Warren Buffett's been preaching and talking about this for years, and now after 40 years, you can see his wealth compounding every year. And it talks about pretty much the same thing. You could see he doesn't change a whole lot. He doesn't focus on the daily ups and downs in the marketplace. You see, Warren Buffett focuses on long-term value investing. In fact, he is famous for saying, when people ask him, hey, Warren, how long should I hold a stock? And he replies, our favorite holding period is forever. Warren Buffett investing principle number 3, invest like you're buying the entire company. So instead of you're thinking buying some shares, you're buying the stock, imagine if you're actually buying the entire company. Would you pay what you pay for the company, the share prices? If you calculate, is this a good deal? Now, if you think it from that perspective, there's a lot of hype you would avoid. You will not be so excited and get all psyched up and hyped up about a certain stock that you know it's overpriced. Thinking about from a perspective speculation, you're like, you know what, maybe I'll buy it at this price, I'm gonna sell at that price. You're thinking about that particular stock price. Instead of thinking, I'm gonna buy the entire company, would I pay that kind of price? Would I pay that kind of multiples for the company? Chances are no. If you're not gonna spend that kind of money, an outrageous price for the entire company, why would you spend an outrageous price for the stocks? Think about it. Warren Buffett says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Warren Buffett investing principle number 4, invest companies with competitive advantages. To Warren Buffett, the world is divided into 2, great businesses and everything else. In fact, during an interview, he said, I look for simple businesses with consistent performance and favorable long-term prospects. Now that's very profound if you think about it. Simple businesses. What makes a business great, according to Warren Buffett? Well, first, a great business is simple. It's simple to understand what they do. It's simple to understand their business model. How do they make money? So think about Enron. We're not so sure how it makes money, but you and I can probably be pretty accurate exactly how Coca-Cola makes money, how Starbucks makes money. It's very easy to understand the business model. Second, a great business has brand recognition. When you think about cola, you think about Coca-Cola. When you think about blue jeans, you might think about Levi's. When you think about fast food, you might think about McDonald's. When you think about running shoes, you might think of Nike. A business that has brand recognition, those are great businesses. It means that they occupy mind share in the consumer's mind. When consumers think about buying certain types of products, they think of that brand. Well, that's a great business. Third, a great business has pricing power. It means this business has the power to increase prices without losing a lot of customers. It means they are the leaders in their industries. They're not competing based on price, they're competing based on value. Now that's very critical because it means over time this business will earn more and more and more profits, and there's enough profit margins for them to grow. Well, Warren Buffett looks at that as well. Warren Buffett says if you've got the power to raise prices without losing customers to a competitor, you've got a very good business. If you have to have a prayer session to even increase your price by 10%, well, then you've got a terrible business. Warren Buffett investing principle number 5, keep cash on hand. One of the things I've learned from Buffett that I love is when he says, be fearful when others are greedy and be greedy when others are fearful. Now, you cannot take advantage of the marketplace if you don't have cash on hand, because when there's a market correction, usually it's unpredictable. So how do we take advantage of it? We gotta have capital. And the best time to buy a stock is when there is a bear market, that you know there's blood, right, on the street. That's when you go in. That's when you can buy good companies, buy good shares at a discount. But most people, because of fear, because of the hype, because of the media, because of the news, they're afraid, oh my God, no one's buying, the economy is bad, and they're so afraid. What they don't understand, if you study history, there's always cycle, right? Economy, there's always cycle. Now, you're not gonna time it at the very bottom of the market and get out at the top. I mean, everybody's trying to do that. It's very, very difficult. But if you have a long-term view and you follow some of these principles, then the likelihood of you being successful as an investor